Welcome to Cash Value Private Banking. Cash Value Private Banking is a unique approach to financial growth. Our clients build their own private banks that allow them to compound their wealth tax-free and risk-free for life, guaranteed, without any exposure to market volatility. In today's video, we explore using your Cash Value Private Bank to buy income property. In this example, we examine an investor directly paying cash for a property versus putting their cash into their own private bank, then taking a loan from their private bank by using their private bank's cash as collateral. The investor with a cash value private bank buys the property with the loan proceeds, but their money never leaves their bank. It continues to compound exponentially for their entire life. There are two ways people without a private bank usually pay for something. The first way is to take out a loan and pay it back with interest. The second way is to save up and pay cash. Both ways wind up back at zero after the purchase. But if you take a loan from your own cash value private bank, your money stays in your bank, compounding tax-free and risk-free for life. The money in your cash value private bank compounds in a steady, smooth, true, and guaranteed exponential growth curve. The exponential growth curve in a cash value private bank is the solution to whatever financial challenge may be coming. Have your cake and eat it too. Use your wealth to buy things like cars or real estate or business equipment while still growing your wealth both inside and outside of your private bank. In this example, we assume the property costs $100,000. Not many places you can find a $100K rental property these days, but the concept works as well at $100,000 as it does at any other number. The analysis period in this example is 30 years. We call this the loan term. We assume the rental income from the property is $1,000 per month. That rental income is paid every month over the 30-year loan term of 360 months. Next, we need to determine the future market value of the property at the end of the 30-year loan term. To get this value, we use a future value calculator. We input the current value of the property, $100,000. We input a reasonable growth rate of 3% per year over 30 years. Multiplying $100,000 times 3% times 30 tells us the property will be worth $242,726. This number goes into our spreadsheet. Next, we want to determine the cash flow the investor will receive for owning the property. We assume the property will produce a rental income of $1,000 per month. We put that amount in the cash flow calculator. We know the loan term is 30 years, so we also put 360 months in the calculator. The calculator tells us the investor will receive $360,000 in rental income over 30 years. We put the income into the spreadsheet too. Before we add together the increase in property value and the positive cash flow from rental income, we have to subtract the price paid for the property. So we put $100,000 in the minus purchase price line item. When we add the three numbers, we see the investor will harvest a net gain of $502,726 from buying the property directly with cash. Now we investigate what would happen if the investor first put $100,000 into a cash value private bank. The first inputs to the spreadsheet are the same. The present value of the property is $100K, the loan term is still 30 years, and the assumed rental income is still $1,000 per month, over 360 months. In addition, the market value for the property will still be $242,726 in 30 years. But things start to get more interesting when we calculate the positive cash flow number. Let's first use a payment calculator to determine how much the investor will have to pay to borrow money from his private bank. The amount of the loan is the price of the property, $100K. We assume the interest paid is 5% per year. This is a very reasonable rate. We use the same 360-month loan term. We find that the investor will pay $536.82 per month to borrow the money to buy the property. Looking again at the cash flow calculator, we first put in the $1,000 per month the investor will receive in rent. Then we input the minus $536.82 per month the investor will pay in interest on the loan. Then we subtract the monthly interest expense from the monthly income to find that the investor's monthly positive cash flow will be $463.18 if they buy the property using a loan from their private bank. Multiply $463.18 by 360 months to arrive at a new positive cash flow amount of $167,040. We put that number into the spreadsheet. It is about this time that people say, "Wait, what? I have to pay interest to borrow my own money? Ridiculous." Stay with us. The story isn't even close to over, and the outcome isn't what it may look like at first blush. You may notice that the right-hand side of the spreadsheet has a line item that the left-hand side does not have: cash value compound. Remember, the investor's $100,000 is still in their cash value private bank, steadily compounding year after year. The annual rate of return in most cash value private banks has been over 5% for decades. To be conservative, we use a 4% annual rate of return in the spreadsheet. We multiply that 4% compounded rate over 30 years and find the investor who owns a cash value private bank would collect $324,340 in growth on the $100,000 in their private bank. We put that number into the cash value compound line item in the spreadsheet. Next, just like we did before, on the left side of the calculator, we need to subtract the price paid for the property, $100,000. We enter the $100,000 as a negative number in the lower part of the spreadsheet calculator. Now we add the figures up to get the net gain of buying the property with a loan from the owner's private bank, $634,106. We then compare this $634,106 of net gain against the net gain of buying the property directly and find that an investor who purchases a property by taking a loan from their own private bank makes over $131,000 more in profit than an investor who directly paid cash for the property. And guess what? If the owner chooses to put the $463.18 of monthly cash flow into their private bank every month, their net gain will be $790,178 for a whopping additional $287,452 of net profit. Now you can see why we love cash value private banks so much. Numbers tell the story. A cash value private bank can change your life. It is free to find out, no obligation. Let us create a personal illustration for you. Reach out now to learn more.